Welcome to Trading Lounge and the Soft Commodities Report, and starting with soybean oil. And I believe that we're still in a wave 4 correction here, and we could retest this particular trend line at 2,800 before we see lower ground, and we'll just have to wait and see for that. But this particular move down through here does suggest that it is corrective. So we're looking for little 5 waves up through to here, thereabouts, and then down from there. That's actually the 38.2 retracement level if I use this low here. The next market to look at is cotton. Okay, so no change here. We'll see this market work lower in terms of this particular structure, so we can expect to bounce off 6,000 back to 6,100 and then down again from that point, then coming back and retesting it. It may even retest it from 5.9, which is a little bit more logical, but somehow I've got to bring in the old low here, and I know 8 carries more weight than number 9. The cocoa market, now we've got 2 counts for this, but this is the bullish count, and from little wave 4 here we've got 1, 2, 3, 4, 5. So I think there can be one more little high here, but that got sold off quite sharply there, so that could be a top in play there as well. But I think you should expect one more high, and either way, you don't particularly want to get involved in this wave 4 here, because it will look a little bit like this wave 4, but just bigger. It will be it's a larger degree of structure, so it'll be larger. So yeah, if you're long, then that's fine. You'll have to leave the stop out of the way, probably under this gap here. Yeah, so yeah, the trend is still up, but yeah, into a wave 4. And at the end of the day, we really want we're looking for a classic trading levels pattern across the 3-3 here, which is the top of group 1. So the arrival, the reaction, first high above the level, A, B, C, then support, and then you're on your bike again. So the next market is the wheat market. Now, a slight change in plan here. Well, not really a plan. We're actually still long in wheat. We never got stopped out below the 480 here. So we're looking for higher ground, basically. We're looking for, and this is with corn as well, we're looking for an A wave, B wave, and C wave. Now, it may just pop its head up to, above here to this level here, or it could pull up to the 50-60% mark. Let's just allow it to, move through the this level here. Whoopsie daisy, and let's just see how it develops once it's done its little thing here on this 500 here, and we'll look at it and work it that way. But we're still looking for the short on this side down here. It is corrective to the upside, so yeah, let's just stay with that there. And that's wheat, and corn is the same as well. So I've adjusted the wave count back to the original wave count. So yesterday we were looking to go short at 379, but that never got triggered, so that's fine. It still could. From here, it can just give 3 little waves back up here and fail and move down. And if that's the case, we can look to go short at 379. But that said, I think that it's best to, I was kind of thinking about this spike here again, and I think that I should sort of try and ignore it to a point, and look at all of this down here as 5 waves down here, then an A wave, a B wave, and a C wave up into this area or somewhere up in here, and then rolling over from that point. So I think that's going to be our main sort of count now for a little while, until we get sort of confirmation on sort of where we are with this. The soybean market's a little bit different, actually. So yeah, I mean, we're actually short in this. So with the other markets pushing higher, I think that we should also look at this market moving higher as well. So I think that we need to take the next logical step, and that would be bringing the stop down to 884 point something or other here would do the trick, or if you can just I mean, normally it'd be nice to sort of just exit here, but I can kind of see this structure's not finished here unless it's a B wave, you know, unless we're still looking up here. This is wave one, B wave to here, C wave up here, bit, you know, the same what we're looking for the other markets there. You know, if this is the case, and it's likely to be the case because of the other markets, then we really want to get these two here to break even here. Okay, so that's the mission, to get to break even, but also to, you know, it would be annoying to get out and then see it drop. Do you know what I mean? So another leg down. So it's about taking the next logical step. So find a stop price. So you know, the 80 is obviously the resistance. So any little move through that, even 81, I think we could put a stop in there to get out. So the main point is to, yeah, put a stop at 881, and we'll leave it at that, shall we? And then we'll see if we get stopped out from that point. Now I'll just save that, because I mean, if it tests the highs here again, it's gonna go. So yeah. Okay, the next is the sugar. So not a lot of change here. We wanted to see how the 61.8 retracement level pans out, to see if this is an A and a B and a C wave here. So in the C wave, there'll be 5 waves. So we've got 1 and 2 already, and 3 and 4 in here, and 5 will be down here. So we're going to get a bounce off here anyway. So I want to see if we get you know, if we get sort of an impulsive sort of thing happening here, or we get a corrective move coming back to, well, 40% rather, and then down from there. That's what we need to sort of work out at this stage. But the way that that's coming down is quite swift, so it's got the look and the feel of it, of a third wave rather than a C wave here, because if it was a C wave here, then it'll be on more of an angle here. So anyway, I want this to play out here, and then we'll focus in on what the bounce is going to be. If the bounce is, if we can identify it as being corrective, then we can look to short this market lower from here. If you're short already, then you'll still need to keep the stop above here for the time being, because there will be a bounce off the 61.8 retracement level here. All right, well, I think that's sort of it, really. So a slight change in corn and wheat and possibly soybeans, which is the main drift, and cotton's still short, and yeah, all good.